Bitcoin is set to be banned in Germany. You heard that right, this is no joke. Investing in it is so risky that even banks could be dragged down into the abyss. The warning comes straight from the German Institute for Economic Research. President Marcel Fratzscher is sounding a serious alarm here and says, Bitcoin and other cryptocurrencies hold the potential to drag the traditional financial system into the abyss. So he says there can be chain effects that spread to the traditional financial system, to banks, financial institutions, and so on. And if a Bitcoin's significant volatility potentially causes people to make severe losses, it can lead to the entire economy crashing and the entire financial system collapsing and widespread consequences. We look at what lies behind these claims, whether it is really true that Bitcoin can cause the economic system to collapse, or whether it is rather the case that Bitcoin is actually a solution to an economic system that has been collapsing for 100 years since we've had fiat currencies. With Bitcoin, there is a way out, but now Marcel Fratzscher comes along and says exactly the opposite. He says, hey, no, Bitcoin is to blame here. It is not our fiat money system that triggered the 2008 financial crisis or something like that. It's Bitcoin that's to blame here. And that's why we definitely need to ban Bitcoin. There's now a newspaper article here in the Schwäbische Zeitung, which has actually written some pretty good articles before. They even wrote an article about the Bitcoin Hotel, where Marcel Fratzscher was a guest for his book launch. So they've really written some good articles. I think there will be another one soon. But now let's definitely take a look at what this has to do with Marcel Fratzscher. Another expert is also being mentioned here who wants to ban Bitcoin as well. I mean, let me just say right off the bat, there's a big warning coming here. And Marcel Fratzscher is really cranking up the panic here. But let me tell you right off the bat, you don't need to worry. Bitcoin isn't going to be banned by Marcel Fratzscher, the German Institute for Economic Research, or any other amateur economist clowns out there. Even when we take a look, Marcel Fratzscher has been massively wrong with all his predictions. Every time he said, okay, hey, Bitcoin, now it's getting dangerous, Bitcoin has shot up significantly. What we're looking at here can also be seen as a buying opportunity. It's perceived that way because in the past, it's always been a really good time to get in when Marcel Fratzscher warned about Bitcoin. This isn't the first time he's warned about Bitcoin, but we still need to take a look at it because his statements definitely can't just be left unchallenged. Oh, and what I wanted to say is that banning Bitcoin is just like saying, okay, we're going to ban the English language, the German language, or something like that. Bitcoin is a protocol, and a protocol can't be banned, just like you can't ban fire. Sure, theoretically, that's possible. But in practice, it's just not feasible, just like banning the German language or mathematics. You just can't practically enforce a ban like that. The headline in the Schwäbische Zeitung reads big, major problems could arise. Expert calls for a ban on crypto investments. So it's not just Bitcoin that's supposed to be banned, but the entire crypto market is on the chopping block here. Economic researcher Marcel Fratzscher holds investments in Bitcoin and company. So dangerous that they also threaten traditional banks. That's what we looked at the beginning when I told you, hey, the traditional financial system could be dragged down with this. I see it differently. Bitcoin is a hedge against the traditional financial system. But now let's take a look at his reasons, because it's about to get started. Cryptocurrencies like Bitcoin are subject to gigantic fluctuations. In a short amount of time, they can rise or fall dramatically. And he sees that as a very, very big danger, that such a massive fluctuation is happening here. He gives an example here. At the end of January, Bitcoin was at 100,000, and now we're sitting at 76,000. And that's just something you need to know. Yeah, sure, Bitcoin is volatile if you're holding it on a weekly basis, or just holding it for 3 months beforehand, or something like that. Then I'll be clear, hey, realize that it's very, very volatile in a short amount of time, and you can definitely take losses at any moment. Bitcoin can correct by 40%, 30%, 20%, or even 50% tomorrow. We've already seen 50% corrections. So we've already seen a 50% correction within just a day or two. It's very, very unlikely that we'll see such a drastic correction these days since the market capitalization is a bit higher again, but it's definitely possible. The trick being used here is one I've mentioned to you before, and it's one that a lot of Bitcoin critics use. They just take a very, very short time frame. They take, for example, a 2-month time frame and say, yeah, look, your Bitcoin has dropped here. And it's so volatile, and that just doesn't work. You can't really see that as a serious investment. He then goes on to discuss the reasons. It's actually partly true that Donald Trump was also responsible here because he stirs up the markets. But what Marcel Fratzscher also doesn't mention is that the traditional financial markets have all gone down too. Look at the S&P 500. Look at all of them. Tech stocks, just look at Tesla, what's been going on there. Tesla has corrected just like Bitcoin, and many other companies have corrected too. Should we ban Tesla now? Should we ban the S&P 500 too? Okay, the S&P 500 hasn't dropped as drastically as Bitcoin. I have to be honest about that. But that's quite a bold move to assume that. Now I'm the big shot here, just because I'm the president of the German Institute for Economic Research. And I know now what people should and shouldn't do. I mean, on the other hand, casinos are still allowed today. At the casino, you're guaranteed to lose because the house always wins. But that's a different story. It then continues here with the price fluctuations. Here it says, Marcel Fratzscher, the president of the German Institute for Economic Research in Berlin, fears that Bitcoin and other cryptocurrencies hold the potential to drag the traditional financial system down into the abyss. That's why he's calling for consistent regulation of crypto assets in Europe. So here he's addressing that he's calling for more regulation. He's not just calling for a ban. At the same time, he seems to be calling for regulation too. So he's calling for both, on one hand, regulation, and on the other hand, a ban. And probably, if he knows you can't really ban it, he just dives right in saying we want to ban it. Maybe he already knows you can't really ban it anyway, so he's also calling for regulation, which doesn't really make much sense. Either you call for a ban or you call for regulation. But Marcel Fratzscher is calling for both regulation and a ban. So we just had the sentence about the regulation that's being called for. And in the next sentence, it says here that financial institutions should be prohibited from investing their own or borrowed capital in crypto assets. Fratzscher advocates for keeping conventional and crypto markets as separate as possible. So here we have the whole ban thing. And now he's getting into the reasons. He says here that big problems can arise. He then talks about FTX, saying, FTX, that was really, really bad. And with FTX, the exchange collapsed, and because the exchange collapsed, we now have to ban Bitcoin. But what needs to be distinguished here, which Marcel Fratzscher doesn't seem to understand, is that there's a difference between Bitcoin that's held on-chain, which you keep in your own hardware wallet and is completely self-sovereign, and Bitcoin that's held on an exchange. I keep saying it over and over, and I'm telling you all right now, hey folks, get yourselves a hardware wallet. I'll put a link down below to a TREZOR hardware wallet. Here, you are completely self-sovereign. You can't have an exchange censoring anything or whatever. And Marcel Fratzscher was talking about FTX, which clearly wasn't about holding Bitcoin in self-custody, but rather you gave your Bitcoin to a third party. The third party cheated you. So it's not Bitcoin that collapsed, but rather a platform built on Bitcoin that went down. And they managed the keys for you. That's something completely different than if there are problems with Bitcoin or something like that. So it's nonsense to call for a ban on Bitcoin. Okay, I can agree that we should say, okay, institutions like FTX, and so perhaps you have to, better regulation or being more careful is definitely needed, because they didn't actually have any Bitcoin. Nothing was backed. They were issuing paper Bitcoin, all right? But to want to ban Bitcoin altogether because of that is just ridiculous. And if you want a hardware wallet so you can operate it completely independently, then I'll give you a link below to a TREZOR hardware wallet. I absolutely recommend it. Every Bitcoin OG needs it. Anyone who is serious about the Bitcoin market shouldn't rely on platforms. And with the code Bitcoin Hotel, you also get a discount when you buy one of those hardware wallets. Fratzscher says then here to observe something like this was here at FTX with Sam Bankman-Fried. Then it is said here that since it collapsed, investors, sovereign wealth funds, and pension funds that had invested capital there also got into trouble. But like I said, you have to differentiate between platforms, Bitcoin, and self-custody. And that's why there are smart countries like El Salvador that have stored their Bitcoin themselves. I don't know if they have it on a TREZOR or what kind of hardware wallet they're using. But they don't keep their Bitcoin on a platform, not even in an ETF or anything like that. And accordingly, that can't happen in El Salvador. That can't happen to you either, as long as you have a hardware wallet. It seems that Marcel Fratzscher hasn't quite grasped that yet. And now the question is being asked, how can you imagine that, so how can Bitcoin create such a contagion that other financial institutions get dragged down into the abyss? And then he says here, the economist explains that traditional financial institutions are investing. Investing your own or someone else's capital in crypto assets can result in high losses due to their highly volatile price movements. Of course, we're only looking at losses here, not profits. You also have to keep in mind that Bitcoin is volatile in the short term, but in the long term, it continues to rise. You have to be very clear about that here, which means you can decide now if you want to trade short-term volatility for long-term gains, or if you don't want to deal with short-term volatility, but then you're guaranteed to get robbed on your savings account. That's a really, really important decision you have to make here. In any case, they're booking highly volatile price developments, significant losses, and then they can no longer meet their obligations to Bundesbank counterparties or lenders. That's absolutely not true. That's only the case for people who approach it too short-term. They might not be able to meet their obligations anymore, so those who don't take it on. 3, for 5 years horizon. Michael Saylor and his loans always last at least 4 or 5 years because he knows for sure that he has to hold his Bitcoin for 4 to 4.5 years to be back in profit. That was just the historical trend. If you've held your Bitcoin for that long, you've always been in profit. Then it suddenly says here again, Fratzscher. The demand is aimed at tightening the current regulation of cryptocurrencies by the European Union. So now we're suddenly back to a stricter regulation. It always swings back and forth. Sometimes they want to ban it. And sometimes he says again, no, let's regulate it instead. With their regulation from 2024, the EU is pursuing two goals. They want to enable the further development of the crypto industry while keeping its risks in check. The second point includes strict regulations for securing investments in crypto assets, meaning if a bank puts money into Bitcoin or similar products, does it have to cover the entire amount like here? 100% backed by equity. That's why institutions for regular transactions only need to keep 8% in reserve. That means investments in Bitcoin and the like are expensive and unattractive, but allowed. And that's exactly what's different. In the US right now, there was now the CP 121 regulation, which was suspended here, because there was also the regulation that banks have to back 100% of the Bitcoin with equity. So you have one Bitcoin, which is worth 1 million US dollars worth, then you have to back it up in plain fiat money to cover the Bitcoin. And now that's been overturned. And now it's also very, very attractive for banks to hold Bitcoin here in the US. Seems like that's not going to happen in Europe, at least from what I'm gathering here. And that makes it less attractive for banks in Europe here, at least the way it's being demanded. That means this is where you can see the difference between Europe and the USA. The US is all about innovation. Europe is all about regulation. So that's the difference right there. And now it's also about the federal bank. Won the article. So it says here, strict rules instead of a ban. So the Bundesbank is not calling for a ban. Here, as Marcel Fratzscher says, the regulations in the EU Regulation 2024, blah, 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 currently do not foresee a ban on investments, but instead lay out specific regulations for a corresponding capital backing is set. Fratzscher's, on the other hand, is calling for a ban. So here we have the call for a ban again. Fratzscher's is clearly calling for a ban here, and he is not the only one. The demand to prohibit proprietary trading in crypto assets is a step in the right direction, says Michael Peters of the Financial Institutions Association. So they've picked out the smartest minds who are clearly saying, no, we need to ban this whole thing. The article also talks about how more and more banks are starting to offer Bitcoin. That doesn't make any sense at all. Look, BlackRock is now offering Bitcoin. The US wants to buy Bitcoin. A whole lot of countries are, let's say, in the analysis phase. Bhutan and El Salvador already have Bitcoin. There are sovereign funds like Abu Dhabi pension funds that are buying Bitcoin. Now, you really think that Marcel Fratzscher has the check here. And Marcel Fratzscher wants to ban Bitcoin now to protect us. That's absolute nonsense. Either he missed the boat here or he's just cutting it off, I don't know. Feel free to drop your reasons in the comments about why he wants to ban Bitcoin, why he's going after Bitcoin. Or he just doesn't get it. He's simply not intellectually up to speed. Or he's just a paid fiat puppet. It could also be that he has simply impregnated the fiat system so that he is not open at all for new innovations, for new technologies. He'd rather stick to the Stone Age. He prefers to stay in the Stone Age and ban everything. Well, I find what's going on here absolutely absurd. Guys, let me know in the comments what you think about this. And now here's the big recommendation. This is not financial advice, but it has always been a really, really good buying opportunity in the past when Marcel Fratzscher warned against Bitcoin. I'll put a link in here below. 21 Bitcoin, where you can easily, safely, and simply buy Bitcoin. Here, with the code, you can still get up to 20% off the fees when buying Bitcoin. Let's freaking go. Peace out.